Hello, my name is Andrew Thape and I'm from Minds and Money. Welcome to today's keynote panel discussion, which is our copper outlook. To join me, I have a star-studded lineup of panelists: Francesco Bressi from Resource Capital Funds, Martin French from London Specialist Capital, William Tankard from Wood Mackenzie, and Artem Sitnikov, who is from the European Bank for Reconstruction and Development. I'd like to start off by asking an opening question to William. Perhaps you can just tell us a little bit about the demand fundamentals for copper at the current moment in time.
Sure. So we are generally constructive on the demand outlook for copper. I would say and recognise probably less so than many market participants right now, and we have generally seen the market sort of running very hard recently, and now, in our opinion, beginning to take a little bit of a breather. In terms of the demand drivers that we envisage coming through, is very much underpinned by a story around energy transition, and we do see this playing a role to some extent, irrespective of what sort of climate change scenarios one begins to frame as the outlook. But we do see demand coming through, particularly around intensity of usage arguments relating to renewable and energy transition initiatives. So, for example, whether we're talking wind power, solar power, the intensity of use per megawatt is considerably above that of your conventional coal or gas fired power station. When one considers the EV revolution currently underway, we're talking about an intensity of use in the order of 3 times that of a conventional internal combustion engine for a full electric vehicle. So when one starts to plug in those demand numbers for energy transition scenarios, you do see an outlook in which demand is going to pick up, and we would consider the kind of the run rate outlook for our central case climate change environment of an assumed 3-degree target, so comparatively conservative at this stage, in the order of 2% compound per annum. So a backdrop of reasonable but not shoot the lights out demand.
Mm-hmm. Bringing in our investors, and perhaps bringing in Francesco from Resource Capital Funds first. As an investor, what attracts you to copper? Is it the energy transition story? Is it the EV revolution story, or is it sort of something else?
Well, hi, Andrew. Look, copper, one of the great things about copper is its fundamentals. You see on the supply side, declining grades, declining production, and on demand side, a very robust demand growth profile. You can be more conservative or less conservative, but at the end of the day, it has very, very strong fundamentals in the midterm and in the long term.
Mm-hmm. Okay, and then for like Martin at London Specialist Capital, for yourself, Martin, obviously, I should sort of explain to our listeners, Martin, as well as working for London Specialist Capital, you're also involved in Chesterfield Resources as well. So you're both on the investor side, but also the mining side. So for you, is like, why become more involved as an investor in kind of like copper mining over the last sort of like few years than maybe you would have done in the past?
Well, I think, as we all know, there's been a massive catalyst impact from COVID. I mean, COVID's made everybody aware that these sort of global challenges to humanity aren't just something from kind of left-wing campuses and stuff. I mean, even Jeremy Clarkson's now jumped on the climate change bandwagon, and it's gone mainstream. I think that's the big change. And it's not just climate change; it's also clean air as well, which we're seeing with electric cars, electric trains, and don't forget things like Crossrail, HS2. They all use a lot of copper. So I think that there's been that huge change and a big run up in the copper price since the depths of the last lockdown. And then obviously you've got the stimulus programs as well, which are COVID related. So you've got two COVID related kind of major kind of global events. And from my point of view, both as a kind of high net worth, I'd say kind of reasonably knowledgeable investor in the mining business, and also somebody who runs a mining company, that copper's here to stay. And that's what I really like about it. And, I'm not concerned, and, we're not concerned that the copper price doesn't have to keep going up. I mean, the copper price is kind of really high as it is, around $10,000. And if you listen to all the consensus forecasts, it's going to go higher. But even at these levels, there's a great future for copper. And I think this is a decade-long story. It's not just something that's going to go up and go down again.
Mm-hmm. And bringing in Artem from the European Bank of Reconstruction and Development, I guess sort of like a sub-question, I think that our viewers would be quite interested to know what the EBRD sort of like does, and also which territories you sort of like invest in. And also, I guess, why has your sort of eyes increasingly turned to copper over the last few years?
Thank you, Andrew. Well, EBRD, by way of introduction, I'm a head of equity mining business with EBRD. EBRD is an international financial institutions owned by the government, which has a special mandate to develop sustainable business and market economies in our countries of operations. And we are, well, the bank was incepted in 1991, so we celebrated 30 years this year. And we have been the impact investor since inception, years before the term was even coined. So we are probably one of the very few AAA rated financial institutions these days. This is, because of the nature of how we were set up. We're geared 1-to-1. We have 30 billion equity capital, and we operate in 38 countries. Originally in former Soviet Union and Central Eastern Europe, now Mongolia, Greece, Turkey, and several countries in North Africa. There are a number of countries which want to join, and we consider an expansion, notably in further south from Northern Africa. We invest across all key sectors of the economy with both debt and equity. We can provide any solutions from the capital structure. 80% of what we do is private sector focused. We have a specialized, dedicated mining strategy, which is reviewed every 5 years, and I think we are now in year 4 of the current strategy. Why do we have a specific and focused mining strategy? For 3 reasons. One is many of the countries where EBRD is present have significant mining resources which are to be utilized or better managed. Second, the past experience of resource-rich countries showed that they were often plagued with inequality and corruption. And third, environmental health and safety and social standards are being applied to various degrees in our countries where we operate. So that's why we one of the goals is to bring those standards into international best practices. We don't have, and that brings to me back to the core of your question. We're attracted to copper. Well, copper focused. We can do basically all metals with a few exceptions like uranium. But copper projects tend to be capital intensive. They bring lasting impact to the host countries, to the communities. They help create jobs, skill transfers, and the copper is long-term fundamentals are brilliant these days. So we see substantial upside and opportunities for our country's operations. So we'll be happy, and we are working on a number of opportunities at the moment. We've been significant investor in Mongolia with financing to Utalgoy, and that's kind of tremendous opportunities which copper projects bring to to the region. Thank you.
Thank you very much for that. William, a few of our investor panelists have mentioned COVID-19. From your and with Mackenzie's perspective, how has the supply of copper been impacted by COVID-19?
Sure. I would say that that the general impact has been actually of remarkable resilience. If you look at the dynamics of the supply side in some of the adversely impacted countries, there were by and large very strong responses by the producers to change the modes of working, to move personnel, discretionary personnel off-site, and this was done with an impressive degree of urgency and comparatively little direct disruption to production. So yes, while there were instances where mines had to temporarily suspend, what we saw was the end year impact much less severe than we would have expected, probably in the order of 2% of global primary supply lost as a result of COVID impact, out of a total allocation of mine disruptions of around 6% last year. And in terms of the impact to producers' costs as a result of COVID related changes to operations, the cost inflation that we've observed has also been incredibly limited, so probably to the tune of 1 or 2%. So I would say the producers have dealt with it admirably. Obviously, on the other side of the market, we saw some profound shifts, which very much speak to the overall price action that we saw last year, and then the rebounds on the demand side coming through this year.
Francesco, in terms of coming back to resource capital funds, I'm just curious to sort of like find out a little bit more about when resource capital funds are investing into copper companies, at what stage do you typically become involved in? And can you just explain a bit more about your investment process and thinking there?
Sure. Look, maybe I should give you a bit of an introduction on resource capital funds. We, started in 1998 with our first fund. We've always been private equity in the mining industry. And right after Fund 6, we basically decided to go to a multi-fund type of strategy. And this is relevant because we tend to divide projects being sort of earlier stage, so PFS and before, from those projects that are PFS and after. So the projects that are PFS and after, we have a fund to basically take them into construction, and the projects that are PFS and before, we have another fund, which is the Opportunities Fund, that is better suited to capture and identify those type of opportunities. So having said that, we have copper exposure both in our current funds, and we are seeking to deploy capital on our new fund from Fund 7. So we basically invest sort of across the development phase and have capacity to invest across the development phase. At the moment we've made an investment in mid 2019 in the Khoemacau copper project in Botswana. So that's of course something that was feasibility at feasibility stage, and we are taking it into operation with our partner. But we also have sort of exposure to developers and earlier sort of stage type of projects in copper.
And like, how long would you typically hold on to an investments? Do you have a sort of an average sort of timeline when you'll be looking to be selling?
Look, we're never a forced seller. We are a long-term source of capital, and I guess that ties into sort of another view of the world. We tend to be agnostic commodity-wise, and copper is not the exception. Sure, it has strong fundamentals, but we need to be able to see assets that are able to deliver capital through the cycle. So, you know, it's got to work in high price environment, but it also has to work in low price environment. So in terms of, you know, what would be our normal preferred sort of time horizon, I'd say between, you know, anywhere from 3 to 7 years.
Mm-hmm. Mm-hmm. And Martin, I guess with your high net worth investor hat on, how long do you typically hold? I guess when it comes to making an investment into copper, how long do you typically look to going to hold those stocks? And I guess the follow-up question is, are there any particular like exploration plays that have kind of caught your eyes recently?
Yeah, sure. Well, I mean, you know, as a high net worth, I'm obviously an absolute return type of guy. You know, in the copper space, you know, because I think the dynamics changed, and I think that the sort of medium to longer term outlook is so good that it's lengthened the longevity of my holdings. You know, and I think that copper is going to be around for this decade and possibly beyond as a really strong commodity. So to answer your question, I'd say probably sort of 1 to 3 years, something like that. And I believe in kind of copper real estate, and I think the traditional kind of value curve that we've seen in mining stocks so often is, you know, a company buys some kind of greenfield land and they start exploring, and the share kind of price starts to go up. And obviously, if they make a discovery or quasi discovery, you get very good leverage, and you can make sort of several times your money. And then as you start going into, you know, beyond scoping into pre-fees, fees, development, traditionally the kind of the value curve tends to flatten out until you start getting into production. So I'm sort of the person at the beginning, or I'd like to be the person who's at the beginning of that value curve. And, you know, I guess, you know, with both my kind of high net worth hat on and as my kind of Chesterfield hat on, you know, we think real estate is going to increase in value. So if you can buy kind of into a company, or as a company, if you can buy kind of large exploration, you know, prospective exploration property, and the kind of property that's going to be attractive to a major or, you know, a large mid-cap company, if you make a discovery, then the value of that land will go up even if you didn't do any work on it. Because I think, you know, everybody in our industry is looking for copper assets. I think a lot of the majors are kind of worried and scrambling at kind of board level that they don't have enough copper exposure. So I think if you can buy that kind of land, that's a really good play. And obviously, you're taking a gamble that you're going to make a discovery. But even if it doesn't make a discovery, I think there's kind of value uplift in these properties.
And for yourself, Artem, is with EBRD, are you agnostic as to which stage of the copper project you get involved in, or do you have a preference to get stage at more like later stage developments and pre-production?
We would typically, for equity, we would typically engage around based on PFS, and we would need to see, kind of plan, work together with the company to work towards to see them through production. And that's obviously dependent upon, you know, how long it takes to go through a permitting BFS and for construction. Our holding period is from 3 to 5, 7 years and beyond. Mm-hmm. And we're not constrained in terms of how much we hold. It's really, you know, we have patient capital. We don't have time constraints, but we wouldn't want to invest and see no action, because obviously that's kind of the nature of the business. So it has to progress towards kind of development.
Mm-hmm. Okay, thank you very much for that. Just kind of like a question for any of the panelists is, I remember like hosting a panel at Minds and Money a couple of years ago, and just someone said, one of the panelists said, "Oh, we seem to have like run out of tier 1 copper exploration discoveries. There are like no more tier 1 copper exploration discoveries to be found." I'm just kind of curious as to whether any of the panelists have got any kind of comments or reactions to that. Have all the best copper sort of like discoveries been found, or are there still some more unknown discoveries out there that are kind of waiting to be uncovered. I saw like Martin sort of smiling as I was asking the question. I don't know if it was you that made the comment a couple of years ago, but perhaps I can kind of like turn to you first.
Yeah, I suppose it's a it's like conflict of interest, but I mean, our company Chesterfield have just bought an entire copper belt in Labrador, and this is something. It's about the same size as the Chambezi basin in Zambia, or as big as the Oudacom the Oudacom sediment. They're all sediment-hosted stratiform beds, and this is sort of the same geology. Udakan is coming into production in South Siberia next year, and they've got a 1.4 billion ton deposit. And Chambezi have got 3 mines on it. So we think that there is absolutely a chance of a similar kind of size discovery on this belt. It's hardly ever been drilled because there's no road access to it. So, I'm sorry to kind of talk up my own company somewhat, but we do believe there's that kind of discovery waiting to happen. I've also invested in a similar kind of theme in Metal Tiger, which is the same kind of story. They're on the Kalahari copper belt, and they've got exposure through Sandfire Resources and Kalahari Metals. So I would dispute that assertion. I think there are still major copper discoveries that can be found. But they may be found in more risky places. I think that's probably one thing.
And then I think that, okay, same question to Francesco and like Artem, but slightly different question. Are there any like copper? Are there any particular like geographies that you're particularly like excited about when it comes to copper discoveries?
Well, I would say that Mongolia still, has huge potential. I mean, obviously, it's not an easy jurisdiction. But apart from that, in a region where we operate, which is obviously kind of limited, is the Balkans. I think there is more to come in Serbia.
Well, and then there's this, okay, you mentioned Mongolia a few times. What about the geopolitical risk there? Because obviously, when I speak to miners in Mongolia, they're obviously quite defensive and say, well, actually, you have to kind of like live here to really understand Mongolia. But when I look at it from afar, and if I put my investor cap on, I'd be a little bit sort of cautious. But you obviously have done sort of much more extensive research at EBRD. What sort of like kind of alleviates your like investment risk and has sort of like led you to making investments there?
Well, I think that the Mongolia is a landlocked, country. It's an obvious, fact, and they have, huge resource endowment, and that's basically their strategic advantage, across kind of various metals, and they have to kind of develop that. And they're rich in various metals, copper, gold, lithium for that matter, could be coming as well. So, and that's kind of their the opportunity. And since we have our differentiating factor is that we not invest in a particular sector, but we have to invest in various sectors of the economy in line with our country strategies. And we have the ability, we have local presence in each country. In Mongolia in particular, we have a significant office there, and we have ability to have a dialogue at the highest level. Unfortunately, or fortunately, Mongolia is a true democracy. There is a good democratic system. It's now post there is which had pros and cons, but now there is with the recent results of the elections, there is a good chance they'll bring a period of stability. And there were, and we know of the success stories, more difficult stories. So it certainly needs investment, and it's we can help there with political dialogue, and that's what, apart from financing and patient capital BRD brings, we can bring local presence and knowledge of the market, and we believe in the country, in its long-term potential.
Sure. And then Francesco, in terms of geographies that you're particularly like focused on? I know that you obviously that your office is in Latin America. Is that a particular area of focus when it comes to copper sort of investments for resource capital funds, or do you also have like investments in other geographies as well?
No, look, yes, we have an office in Latin America, but we also have offices in Australia, Denver, London. We look at everything, so we're agnostic jurisdiction-wise. I mean, if you look at our recent, at our latest fund, you know, we have investments. We've done investments in Kazakhstan. We've done investments in Burkina Faso. We've done investments in Botswana. So, you know, geographies are not really, you know, we're not really constrained by geography. I mean, of course, there's countries where we would probably struggle to find an opportunity that would justify the risk. But no, we you know, we tend to look, you know, anywhere in the world. Now, Latin America for copper, it's really important. And this goes back to your previous questions on, you know, where do I think next discoveries are going to be found? I do believe the Andean belt is probably one of the best belts for you know, a next discovery. Policies allowing, but you know, it's a great jurisdiction. I think, I mean, if you look at Ecuador, Colombia, those are even Chile to some extent, you know, but are relatively unexplored regions, and there's some great exploration stories, you know, that sometimes you drill and you just find something amazing.
Mm-hmm. What's the geopolitical risk like there?
I'm sorry,
what's
Andrew?
What's the geopolitical risk like there?
Look, most of the times is governments changing their mining policies, you know, every once in a while, or every, you know, too often. That's something that of course creates volatility, and it's not something that we particularly like. But it's mostly around those things, and a lot of it has to do with just the fact that you know, the more should be done in involving communities. I think we're going in the right direction, but making sure that the benefits of mining are seen and received by everyone. If you look at Cobre Panama, I think that's a great example. You know, and that's going to be probably a game changer for the Panamanian government in terms of you know, fiscal you know, taxes that are going to come from that project, and benefits for the whole country.
Yeah, if I could step in and just really join in and reinforce, I agree 100% with Francesco. I think the Northern Cordillera, Ecuador, Colombia, has just been so relatively underexplored relative to the theoretical potential there, and we are seeing some relatively grassroots activity delivering some really exciting results at the moment. I think in Colombia, the access to deposits is somewhat compromised, whereas on the political side in Ecuador, I would say that it's going a little bit against the grain of the general direction of travel in Latin America at the moment, of a sort of a shift to the left. Ecuador is kind of in the other direction. And then to Artem's comment, I think also Serbia is looking like a real growth area over the next few years in terms of the western extension of the Tethyan belt, relatively underexplored, and I would say a lot of potential there. Mongolia or kind of Central Africa, there's also tremendous opportunities there, but you know, you have both governance and also logistical constraints, which means that you know, you just need so much differentiation in terms of grade to make the logistics work in those landlocked areas that yeah, you're asking quite a bit.
And just a follow-up question, William. I joined Minds and Money, was it 7 years ago in 2014. It certainly feels like that there's more copper exploration companies in 2021 than there were 7 years ago. How many kind of roughly like copper exploration plays are there in 2021 as opposed to 7 years ago? I presume it must be more, but I'm just wondering if there's a number there. I see you raising your eyebrows. I've asked you a curveball question.
I have absolutely no idea about that, Andrew, but I think look, the reality is that the market conditions and the outlook have are diametrically opposed to the situation in 2014, and yeah. Since then, and I would say particularly since 2017, setting the grassroots side, setting the grassroots exploration side to the side and thinking about development, we've seen this massive wave of capital investment and project commitments over that period, 2017 through to early 2019. Probably, you know, annualized 4 or 5 million tons of production capacity got the green light and board endorsement to build. So you know, looking at the projects, there's going to be considerable supply growth, and I think if one looks a little bit further out, you know, one of the issues that we see with the market is there's going to be massive supply growth over the next few years, and probably pushing towards a deficit market, so a surplus market over the next couple of years. The issue is that once all of that growth has been delivered, we see a real hollow spot, and what I'd frame as a potential opportunity for earlier stage explorers. There is going to be a significant need for copper in the kind of post 2025 phase, and right now the issue is there is not tremendous amounts of clarity around where that's going to come from. We've got plenty coming through, but that's probably going to run for the next 4 years or so, and then yeah, there's going to be serious requirements for those earlier stage projects and opportunities to start delivering and progressing through pre-feas and feasibility to be kind of approval ready for the next upswing.
Is that sort of like part of, I guess, like the thing that Robert Friedland, I think it was him that coined it, he talks about the greening of the world economy. So when you just made your like remarks there, William, is that where you see like the role of copper really sort of fitting in over the next few years?
Well, I mean, as I framed initially, we're broadly constructive on the demand outlook, but we expect supply to be outstripping demand over the next few years. So we see price downside, which is probably against consensus on this panel over the period through to 2024-25 from current levels. It's run too fast, too hard, and we've got some major supply coming through. I would interpret the sort of the greening of the economy as probably two angles. Firstly is you know, copper is a very broad-based facilitator in energy transition. So you've got a number of metals that you can kind of say, you know what, I'm really behind metal X because of this application, or metal Y because of that application. And the interesting thing about copper is wherever you look in terms of a sort of a rotation out of fossil fuels into energy storage, copper tends to be this recurring theme. So I'd say one is on that sort of broad-based nature of long-term demand opportunity, and the other is probably on kind of the inverted commas circular economy, actually planning for products and consumables to be more sustainable, to be more recyclable, which again, in the long term, if one takes the view that demand is going to be robust in the long run, which we do, then you're going to have to be finding other areas of supply opportunity outside of primary. So there's going to be very much an onus on the scrap side, on the recovery of scrap to also contribute to meet the long-term supply gap that we envisage would come through under that energy transition scenario.
Did any of our other panelists have anything to add to the whole like greening of the world economy, and any sort of like thoughts out of the role of copper there?
Yeah, I mean, I agree with William. I mean, the thing about copper is, it's a basic building block of this energy transition. I mean, and the only better conductor of electricity is silver, and you could argue kind of graphene, but they're much more expensive than copper, and there is no substitute to copper. And if you look at, lithium is probably not a bad bet, because I don't think it's going to be a substitute for lithium, but cobalt recently started to be engineered out of batteries, and so there's kind of shifting sands around various different technologies, but copper, is such a kind of solid bet. I'd also agree, with William. I mean, scrap copper is very, very price elastic, and they've had a lot of supply chain constraints on it. And I think once scrap starts coming back into the market in a big way, that's bound to be a bit of a dampener on the copper price in the near term. There are also some quite interesting new technologies coming through to reprocess marginal, submarginal waste dumps, very low grade copper, and that will have an impact. But I mean, in my position, I listen to a lot of the big forecasters of Mackenzie or Goldman Sachs, etc., and try and get a consensus view. But it would seem that at the very worst, copper is going to be robust, and if you listen to other people, it's going to go up. I'm also kind of in a position where, corporately, and both as an investor, I'm actively looking around the world for new exploration assets, and I've got quite a good feel for that. And I would say, it is getting difficult to find good quality exploration assets. And you have to start looking at sort of riskier places, sort of Egypt or Ethiopia that's at war, and it's getting a bit thin. So I don't know what the pipeline's going to look like in a few years' time. Yeah.
And then, have you actually increased your allocation to copper projects over, say, the last few years?
Well, as a company, we absolutely have, and we're kind of based, our main kind of projects in Cyprus. But we say we just added this very, very large copper basin in Labrador. But from and I guess my kind of personal investing is very much in line with that kind of thinking. I mean, I'm sort of personally looking around for copper plays. And there are not very many copper plays on the London market. That's what I would say. Sort of kind of slightly answer one of your recent questions. In fact, surprisingly few, whereas sort of Australia, Canada, they're more. But it's still, it's still, I just think it's just a great sector to be in.
We could have touched on briefly copper recycling and sort of like copper technologies that could be used in either recycling or production. Just bringing in Francesco first, followed by Artem. Are there any particular sort of areas of copper recycling or copper technologies, I guess, in the sort of processing that particularly sort of attract you as an investor?
Not really, at least not for us. And the reason is, our sort of bread and butter, our expertise is in mining. So copper recycling, sure, we could, look at it, but it's not, it's not our expertise. It's not where we are super strong about. We just understand very well mining and, its risks, whereas the other is more of a sort of downstream processing type of play.
Okay. Maybe I should better redirect that question to sort of William, in terms of the whole, because you touched upon kind of copper sort of recycling earlier, but where do you see the market for copper recycling maybe heading over the course of the next few years?
Sure. So, I mean, at the moment, scrap accounts for about 1/3 of the supply side, and we do see that growing progressively as also the size of the market grows. So, in addition to a generally larger market, we would expect over the next sort of 10 or 15 years that proportion to be growing to more like 2/5. And I think that there's a few factors in play there. One, when one considers the kind of the first Chinese economic boom, you saw massive construction, tremendous amounts of investment into building and developments, which frankly are probably had been undertaken to a comparatively lower quality than would be the case in the same jurisdiction now. So we would expect there to be kind of outflows from certain portions of the infrastructure segment, and scrap coming back that way. I would say the other interesting angle is scrap collection and what fabricators of consumables can do in terms of enabling that circular economy. I think that some of these are going to be driven or are going to have to be driven by policy, by government initiatives. But I think there's also going to be an element of consumer pull. The same consumer that cares around the ethics of the gold in their phone or their computer is also going to progressively be more concerned about whether that material is recyclable at the end of life. So I think we're probably going to also see aspects of improvement in terms of the design for dismantleability and recyclability of consumables, where in previous iterations, generations of technology, it would be the tendency that a lot of this material would just go landfill, and now there's going to be greater appetite going forward to enable those valuable materials to be recovered.
We've got like a couple of minutes for a couple of like closing questions. We've obviously talked about the supply and demand for copper. I'm just curious whether any of our panelists, I might just start with like Artem first. Do you have any sort of like gut feel as to where we can expect to see the price of copper maybe heading over the course of the next couple of like years or so, and what's your rationale behind that?
Well, we tend to look what kind of the major power brain in the sector, like Wood Mac, kind of are projecting, or Mind Spence for that matter. So we see that we believe that there is the future is kind of bright for copper price, kind of whether it's kind of 10, 15 thousand per ton. Well, hard to say, but we are lucky to be present in jurisdictions where the assets look very competitive, even at low prices. So I'm sorry I can't give the house view on this one, but
sure, no, it's no problem at all. And I guess for you, Francesco, maybe like a slightly sort of like different sort of like question. I mean, in terms of like copper as opposed to other commodities, how bullish are you in comparison with other sort of commodities that are within RCF's portfolio?
Look, we like copper. The issue is, it's got a whatever asset we invest in, it's got to be able to live through the cycle. So, it's.
Mm-hmm. Okay. I think we had to say. I think Francesco, your screen just froze a bit. Do you want to just try answering again, or? Yes.
So sorry. No, look, we like copper because it has very strong fundamentals, medium term and long term. But it's got to, for us at the end of the day, it's got to make sense. So sometimes you see assets that are ridiculously priced, and it just is very hard for us to justify investing in those assets. So it's always a balance between what's the value of the asset today and what we think the value of the asset in the future is going to be, and making sure that the asset is robust enough that can survive sort of low copper prices.
Sure. Question for Martin. Obviously, again, you're very, very bullish with regards to the copper investment thesis. What would have to happen to copper for you to change your mind? Is it something like the price of copper suddenly crashing? What sort of event would have to happen for you to sort of change your mind and you're like bullish about copper to change to bearishness?
Yeah, it's an interesting question. I mean, I can't really, I mean, I think it'd have to be linked to the global economy. That something bad would have to happen to the global economy to really kind of derail copper. Because I say, I think just the sort of change in human nature that's gone on because of this COVID pandemic, that people have become so much more concerned. And I think, you know, decarbonisation is an unstoppable train. I really do. And I can't see the, you know, any kind of replacement for copper in terms of its properties to conduct electricity. So, you know, and frankly, if the copper price came down a lot, I'd probably become even more interested in it. So, I mean, I guess if it went up too much, then that's something where, you know, you start to get a little bit concerned.
Yeah, I mean, because I mean, I think we, you know, we earlier today we can moderate a panel on uranium, and the answer to that question is maybe if there was another Fukushima, you could then see, I guess, the outlook for uranium becoming more bearish. But for copper, because decarbonisation is just such a strong story, I guess it's the most common buzzword within the mining industry in 2021. I have to admit, I know I do kind of share the, you know, the optimistic outlook with, you know, with regards to sort of like copper that we've heard many of you go and express here today. Just as one final kind of quick sort of like summary question, and I'm going to do a round robin to each of the four panelists. If there was one takeaway from about copper from this panel today, what should that one takeaway be? I'll go to William at Wood Mackenzie first.
I'd actually like to do two. One is beware the oncoming supply, and the second would be beware sky high prices, which I would say would drive substitution, you know, for elements like aluminium, which is a pretty good conductor. I think if you get too much differential there, then you do get demand destruction over time. So I'd say watch out for those two, and we would say that there's probably entry opportunities coming before a resumption in the bullish trend.
And Francesco at Resource Capital Funds.
I think first, the copper fundamentals are just better than any other metal, and that's eventually going to have to be reflected in exploration companies. The copper space has been underfunded, especially on exploration, for way too long.
Mm-hmm. And Artem from EBRD.
I would agree with Francesco that, you know, exploration has been you know, overlooked, and it's something which, you know, should see more attention in the next you know, years to see how the resources can be replenished. On the other hand, investors should be mindful that, you know, recycling risk is there, and that will inevitably happen. To what extent it will affect supply to be seen. I think long term the trend is still very bullish.
Mm-hmm. And the last word goes to Martin from London Specialist Capital.
Yeah, I think I'd agree with you know, William, some of the other sentiments that near term, you know, copper may become a little bit more choppy in terms of its price. You know, in a very bullish mood, and then people may suddenly become a little bit less bullish, but I think the long-term trend is still super strong. I think the other thing, you know, I observe is that it's going to become more and more difficult to find good exploration acreage.
And I think I'd certainly sort of like agree with a lot of the sentiments expressed here on the panel today. I'm certainly very, very bullish and optimistic about the outlook for copper. So I'd just like to go and thank the panelists for today. Once again, they were Francesco Bressi from Resource Capital Funds, Martin French from London Specialist Capital, William Tankard from Wood Mackenzie, and Artem Sitnikov from the European Bank for Reconstruction and Development. This was Andrew Thake, Head of Content, Mines and Money. Thank you.